What's up, YouTube fam? Welcome to the single most important video you're gonna see on the internet today. If you've been following this journey, right? If you've been with me from the beginning, right? Then you've had better days than you're having today. But we are gonna save that. We're gonna make it work. And this is the single most important video on the internet. If you're an option seller, if you're a put seller, and you have in the money options expiring tomorrow, I'm going to show you guys what we're going to do and how we're going to make it work. So let's get down to the basics, right? Let's talk about what happened first and foremost. Okay, the entire market came down, right? So let's look at the NASDAQ first of all, okay? That, if this happens, then every single lower market cap asset is going to get destroyed. That's what you guys need to understand, right? So people like us who are in a lower market cap, or to get even crazier, right, a leveraged index of a stock, we are going to get destroyed when the NASDAQ does this, right? It's just, there's no way around it, because trying to time it is going to cost you so much more money, right? My thesis in this, as I've called it a business model, my thesis in this business model is that time in the market will always beat timing the market, right? It's like, imagine you saw this and you were like, oh, it's going to dump. You just missed out on all of this, right? Meanwhile, even after this, you're still up, right? Now think about if you did it here, if you did it here, if you did it here. And we could just zoom back on the NASDAQ forever, and you will see that that thesis is true. Now, that's also why the stock selection is so important when you're going to sell options. So let's get into it, right? How are we going to save this position? It's called rolling, right? We haven't had to do it yet on this channel. We haven't had to discuss it, but now we do. So what is the number one rule of managing money? I've quoted it on this channel, and I'll quote it again, is don't lose money. What is the number two rule? Never forget rule number one. So what are we going to do? We are going to stop ourselves from losing money, and we are going to buy time. Now, how do we do that? Well, here's the beautiful thing. We can roll this position at our exact strike price for a credit of 1,300. So what does that do? That now gives us all of our money back, essentially, right? It gives us the exact position we're in with the strike price, with a credit of 1,300. Now, assuming it doesn't work out, assuming it stays low or goes lower, then we will just keep rolling. Now, here's the thing. I don't want to roll the 55, because the 55 would be the strike price I'm already in, right? So I'm trying to get even more out of this, right? And how do we do it? We do it by rolling down. So if we roll down as much as we can while still collecting a credit, we're putting ourselves in a position where we will lose absolutely nothing. So in this position, we're going to gain $200, get an extra month, and our strike price will be down $4. So you do the math, 400 times 4 is 1,600. So you're gaining 1,600 in value, you're gaining 200 in profit, you're keeping your whole entire position at the size it was. Now, it's extremely important to note that, right? Right now, we're looking at an account that's worth 21,000. The gains will be expeditiously slower if I was to close this position and start from 21,000. And that's why panic selling is never the answer. The answer will be to roll it, because when the market bounces, the gains will be that much faster. You'll go from 21 back to the 25 that we were at before this so fast that it's just so much better for you to roll the position. So, rolling is not something a lot of people even consider. It's not something a lot of people know. But in my opinion, the number one way to do it, right, as much as, we can take the same strike and collect more in credit, I'd rather get the credit of being able to buy lower, because then if it does go lower, right, we can just keep rolling down with it. So this position, we might be in this position for a while, right? You guys might have to sit tight. Ultimately, I'm going to fight in this position, and that's why it's so important to pick stocks you believe in. For me, crypto is worth the risk, and a 2x leverage asset is still worth the risk, in my opinion, just because, this 25,000 that you guys see me playing with is not all my money. So if you're following my plays with every dollar you have, I just want to reiterate, that's not who this is for, right? If you have a $200,000 portfolio and you're playing this type of size, right, that's a different story, okay? So I don't want people who are using every penny taking the risk I'm risking. What I recommend is, again, if you have a $200,000 portfolio, then put 20,000 into a play like this. Put 20,000 into stocks that are less volatile, or just spread it out, right? Like, obviously everything's down right now, which is part of the reason why I'm not concerned, right? It's like, The stock market, okay, you know, I don't really look at these percentages because when you actually look at the stock, right, it doesn't actually truly mean anything. GME doesn't mean anything. DocuSign doesn't mean anything. But the stocks that do mean something, Apple had a nice bounce. Let's keep going. AMD's free falling. Amazon we looked at already. At the end of the day, right, we don't even need to look at the individual stocks. We could just go ahead and look at the SPY, right? So it's like the market is falling, right? And I'll tell you guys this. This is why I'd rather be in a bullish type of strategy, because it's okay losing money when everyone's losing. But when you're in a bearish strategy, right? Yeah, they're successful bears, but let's be real, not really, right? And I'll tell you guys that there is nothing in the world worse than you being the one losing money when the market's going up, which obviously if you zoom out, the market does tend to go up a lot more than it goes down. So moments like this, you just have to know how to survive, how to navigate, how to save your money, right? If I was to let these contracts get assigned tomorrow, I just don't think the recovery process would be as smooth or as fast when I can roll down. And that's part of the reason why I want to roll down, is because if the market does keep crashing, I want to keep getting a lower strike price while not having to lose anything, right? Like I can roll all the way down here, but then I'm losing 1,500. I can roll all the way down here, but then I'm losing 1,200. When you do the math, it's still a good deal, right? Because now instead of buying at 55, you're buying at 45. So you're losing 1,500 to save yourself $4,000. It's still a good deal, but I like to just win in all aspects, right? So now I'm saving myself, again, 1,600, right? 400, 400, 400, 400. And I'm saving myself, or better yet, making myself an extra 2. This, in my opinion, is how you roll correctly. You know, if you're going to do any of this, it's not that there's anything wrong with it, but you're just taking an unnecessary loss, in my opinion. So, you know, that's going to be the plan tomorrow. You know, I'm going to probably wait, see how the day goes, and try to get the most optimal entry. Obviously, in the rare case that it does take a huge bounce, you know, Bitcoin, you know, it looks super bearish still, but in the rare case we do get a huge bounce, maybe I can get out of this position and make all of my money back, right? But ultimately, if we can't, then the best thing we're going to do is roll, which is going to save us basically everything and make us 200, right? And I'm telling you guys, it's important to save the money, because when it recovers, it'll recover so much faster having that bigger position size, right, than as opposed to letting this position close and having to buy it at 55 and just riding it from there. You're much better off just rolling the put, doing it this way, getting a credit while keeping all your money. You know, there's just nothing better than that. And obviously, if this bear market continues, we'll keep rolling until we save every penny. And you know why? It's because in the end of the day, right, I trust Coinbase is going to go up with the crypto market. And I trust Con-L, you know, is going to go up 2x the speed of Coinbase. So I'm prepared to ride it out with this position and just continue rolling down, getting credit while not losing money. Because when it does bounce, the money will return very fast and we'll continue and just get back to what we're doing. So I truly believe this is the most important video that anyone who's selling puts is going to watch on the internet today. I don't think there's anything else out there that's going to guide you. I know a lot of you guys are in these positions similar to me, and I think that's the best way to go about it. You know, if you can't roll for a credit for the next week, roll for 2 weeks, roll for 3 weeks. You know, and that's why it's so important to be in the right stocks, being in stocks that go with the whole market trend, because you don't want to be in the one thing that's going down. I'll tell you guys right now, like if the market looked like, if everything here was green, right, and I was in the one crypto or the one stock that was going down, that would be a very different story, right? Like if you were going to ask me, what would I do with this Con-L position? I would consider closing this position if everything was going up, right? Bitcoin, NASDAQ, SPY, every stock in the world, and this wasn't. And that's why the stock selection is so important, because you do not want to get stuck in the one stock that's going down. You want to be riding with the market and just basically maximizing the gains you can get from the market. So, you know, in the end of the day, these strategies are important, but the stock selection is even more important. In this case, yes, I took on more risk than the average person should take. And I'll admit that. I'll own up to that, and I'll learn from my mistakes. And that's that, you know, and that's why this documentation is so, you know, great, because I don't have anything to worry about, right? Like this is my money. I'm doing it publicly. I'm not coming from the frame of reference of a guru, right? Come teach me and you'll learn. Like I'm coming from the frame of reference of a guy who's just trading and putting my thoughts out there. So I hope you guys have truly enjoyed this video. Obviously, we're opening up the free community very soon. There's 130 people on the waitlist, and then it officially closed. It literally is not taking new people, so don't worry about signing up. But if you did sign up, you will be absolutely getting invited, and then we'll probably open it, shortly after that. So I hope you guys enjoyed this video. I hope you learned a lot. Comment what you think about what I'm planning on doing. Tomorrow, I'll make the video in the morning to show you guys exactly what I do, so you guys can see that as quickly as possible. I'll post it as quickly as I possibly can, but I might wait a little bit. I might let the markets, see what happens, right? Because Friday is a trend day, but Friday is also a crazy day. It could be a very, sharp reversal for all we know, right? And that's why trying to predict it is not really what I'm looking to do. I'm looking to just navigate it and ride it and maximize my gains from it, and hopefully you guys can do the same. So I hope again and you enjoyed this video. Make sure to like, comment, and subscribe your make sure to like and comment your thoughts and subscribe for more content. And I can't wait to see you guys tomorrow for the next one.